Good afternoon, everyone. I'm Phil Carmalt from DBS Global Transaction Services. So DBS is a leading Asian bank headquartered in Singapore. And as Asia's best digital bank, DBS takes a client-centric approach to solving problems through digital solutions. So today we're launching DBS Treasury Prism, an online cash management simulation platform we've built for corporate treasury and finance teams. But first, let me talk about the problems we're here to solve. So last year, we interviewed 30 corporate treasurers on what are the challenges they face today in optimizing their cash management. And we can summarize those 3 challenges as follows. First, no time to keep up with regulatory change in Asia. So I was at the ACT Treasury Forum a couple of weeks back in Singapore. And the top question of the day, as voted by the audience, was how do regional treasurers keep on top of the ever-changing regulations? So some treasurers told me they still rely on a hard copy manual from 2014, it's several years out of date, because they can't find a good source of information online. And I think the second quote here is quite telling. So corporates often rely on their banks to give them this advice. And if the corporate is not a VIP client of the banker, they may miss valuable information. Second, it's too much work to get to an optimal solution. So banks typically talk about what capabilities they have. They won't talk about what they can't do. So for a corporate to get an idea of what's possible in the market as a whole, they need to speak to many different banks and have many different conversations, which takes time. And third, to quantify the business case, to quantify the benefits. Again, typically, if you look at the easy things like the bank fees, like interest rates, you only have part of the answer. So what about, for example, corporates' internal costs on their payments? What about withholding tax on intercompany loans? You need to calculate these things to get the end-to-end picture, but it's hard. So now I'll talk about how we try to solve these through Treasury Prism. So here, we're in a simulation, and you can see it says 10 accounts in 5 countries. So I've just loaded in here some the average balances by country and currency. I've also loaded some payments and collections data you'll see later. And just to show you how easy it is to add additional countries, I can just click an additional country, drag my slider left for negative balance or right for positive balance, and then add that to the sim. And as I do that, I see these insights appearing on the right panel. So here, this right part of the screen is basically always giving the user contextually aware insights. So when we're adding accounts, we will get account-related regulatory information. When we're adding liquidity structures, we'll get liquidity-related information, and so on. And we use 3 categories. So the orange category means regulations do not permit this to be done. The blue one will be allowed with some considerations. And then green will be an opportunity. So now we have our data in. Let's build a liquidity solution. So I'll first select the kind of tool I want to model. In this case, let's choose ZBA. And then I can use this drag-and-drop interface to build my structure. So let's say I want a US dollar pool in Singapore. I can drag my account over here as the header, and I will select what accounts I want to as my participants and drag it over here. Now, as I do that, the system is giving real-time feedback on the possibilities. So I'll see on the right-hand side here the insights all populating. So let's first look at the orange category. So here we have an insight for India saying that because cross-border borrowing and lending is not permitted, India cannot participate in this structure. And that's also why I can't save this structure here. So I may want to drag this account out. And now I have no more errors. I can save the structure. Let's also look at the blue items. And just to highlight one of them, let's say for China, it will say that there's the 5 criteria that need to be met in order to apply to SAFE for the cross-border foreign currency sweeping. So again, all this kind of info is typically given by banks to corporates on a very ad hoc basis. But now we're giving a self-service platform for corporates to find out this information themselves. And finally, opportunities. Because I've got Singapore and Hong Kong in my structure, it's advising me that both those countries offer corporate treasury center incentives for lower tax rates and so on for eligible parties. So now, let's say when I finalize my model, I can save, and that will commit this structure to the simulation. And what you'll see also is along the top, you see some numbers appearing, and I'll explain those in just a second. But first, I can see a simple diagram of the structure. So this is a very simple structure. We just have 4 USD accounts. The account with the diagonal pattern is in overdraft position, the other accounts have a surplus average balance. If I toggle the before after, I will see the effect of the structure. So what will happen is the participants will be zero balanced, and the net funds will sweep up into the header, like so. And then now the top. So this 146.8K is the benefit to the company of this structure. And we consider 4 factors in this benefit. The first will be the interest rates. So we've loaded in market standard interest rates by country, by currency, by tool. Second is withholding tax. So in this example, we have an Indonesia and China entities, lending to Singapore entity. So Singapore will pay intercompany interest, which is subject to withholding tax payable to non-residents. So what happens is our system will look up all the DTA treaty rates and use the correct rate depending on the legal entity countries and use that in the calculation. It's something which no bank is offering today. We also look at the bank fees and then corporate internal costs as well. So what we could do at this stage is we could export an Excel sheet which looks something like this, and it has all the back-end calculations, so you can see all the interest rates used, all the withholding tax rates applied. And we're also going to give a functionality to our user to be able to upload their own interest rates, pricing, whatever they want to produce a more accurate simulation. So that's on the liquidity side. On payments and collections, we've also modeled some instrument usage. So if I go, let's say, to India here, the company today is using, say, check outsourcing for their payments and manual check deposits for their collections. In the bottom right of the screen, you'll see some numbers. So here, the system is estimating how much all these payments and collections are costing the company, both in terms of the bank fees, but also, somewhat unusually, we also model the corporate internal costs of payment preparation, getting authorized signers to sign the checks or approve the payments, handling rejects and returns, lost checks, and handling reconciliation. And we've built a bespoke cost modeling exercise where obviously costs in India are going to be cheaper than costs in Hong Kong because of the office rental costs and salaries and so on. So what we can do with this information is, if we look at lowest cost, this is giving a theoretical situation. What if I was to move all my payments and collections to the cheapest electronic instruments? What would be the potential savings for the company? And that's a kind of a max benefit, but it may not be implementable because there are various clearing system limitations or market practice considerations here. So we've also built in market norm analysis, which says for each country, what is the typical split of instruments used for corporate payments and corporate collections? In this case, for India, 65% ACH, 25% check outsourcing. So in fact, as a regional sales manager, corporates sometimes ask me, you're my banker, you can look at my payments and collections information. Tell me, am I doing things the best way, or can I improve? And this is a way of automating that analysis so they can compare, make sure they're using the cheapest payment types. So we also have another function which is called optimize. So with optimize, the system will actually do a Monte Carlo-like analysis and come up with many different possibilities. So here you see each of these circles is actually a different simulation the user can explore. We call these prisms. So in the same way that prism splits white light into many different colors, we take the user's input data, accounts and balances, and we transform that into many different possibilities. So this can also be an educational tool. So if the user has heard of notional pooling, but is not very sure what it means, they can filter accordingly, and you'll see the system is proposing notional pools in Singapore, Hong Kong, Indonesia, Taiwan, with different cost benefits depending on the different withholding tax and all this kind of stuff. So if I save this simulation first, I can then go into a prism and again see the kind of structure the system is proposing. So now we'll see there's a notional pool structure, and the system is intelligent enough to recognize when accounts are in a different country to the pool country, you need to open a new account in the pool country location and do cross-border sweep and so on. Now, finally to show you, the user may not be that familiar with, again, what is notional pooling. So we've also built in a search function where they can search and bring up Treasury concept articles. So these are educational materials explaining what is the solution, how does it compare with other solutions, what are the regulatory and tax implications. We built this for 12 different Treasury concepts, including things like netting and payment factory, which are not bank solutions, but corporate Treasury solutions. And we also have country profile information. So we're launching Treasury Prism today, but in the last 3 months, we've done an extensive beta testing phase. We've made the tool available to 70 corporates, and these are some of the quotes they had. So, I mean, we're very pleased that it's having an impact on the customer, and we're hearing that it's saving them time so they can focus on more value-added work. So, finally, these are some of the next future developments we plan for the tool. And on integration, we are doing a partnership with a well-known cloud-based TMS provider to generate an out-of-the-box report so that their clients can get data into this tool, so we can better integrate Treasury Prism within our clients' ecosystems. Thank you very much.